You sexy storage lot. Okay, so today I want to talk to you about EBITDA and CFADS and accounting in general. Why do I want to do that? It's because it popped up in my life, and if you are growing your self-storage, it will pop up in your life as well. The accounts. I never ever knew how important accounting was. In my own opinion previously, and I'm devastated to admit this. 6 years ago, I thought, hey, listen, I bring the money in, I bring the profit to the company. The accountant, he does the accounts. It's embarrassing even saying it out loud, especially to you lot who listen to the podcast, because that is the most stupid, immature thing a business owner can ever say. If you do your accounts on a yearly basis, right, any management accounts, etc., right, you do them from 1 month, say, it's a 12-month period, okay, right? You've got 9 months then to get the accounts in. So you could be, so if you take 9 months to get the accounts in for your accountant to do them like I used to, that means you're looking at data that is 21 months old. 21, yeah, 21 months old. Yes, 21 months old. And that is absolute public maths. I'm really good at maths, but then I get all nervous and flustered when I'm talking to you guys, right? So I think it's 21 months old. You're looking at data, you're looking at accounts. How can you make any informed decisions from accounts 21 months ago? It is ridiculous. So you need management accounts. If you want to expand, if you want to borrow, if you want to know exactly what's happening in your business, you need management accounts. You need P&Ls on, and I know this is going to bore you, but don't worry, I'm going to get to some fun bits, right? So you need P&Ls, you need cash flow forecasts, you need balance sheets every single month. And if you want my accountant, Ian, to do it, he's absolutely fantastic. MBS accountants, Ian, he does all my accounts. I pay like £1,000 a month, something like that. But I get a shitload for him because I need a shitload because I go to a mastermind and I've got to display my figures with a board of directors, if you like. And I've got to go through with 10 different business owners, all my accounts, my balance sheet, etc. And the reason I got good with my accounts, I'll tell you the reason, and I'll go on to what I really want to talk about today. So I went on this skills day at Dan Bradbury. I read his book, Breeding the Gazelles, and I thought, oh, this guy's amazing. Who is he? And I couldn't believe he lived near the Coventry area. And so I looked him up a little bit. And I'm like, oh, he does some training. Right. Oh, he does accountancy and marketing. I'm pretty shit up with marketing, if I do say so myself. But accountancy, I'm rubbish at it. So it was a 2-day event. The first day was cash flow and cash and all this. And I'll be honest, I was completely out of my depth. I didn't know what was going on. It was embarrassing. The next day, by the way, I owned that room because I believe, oh God, it sounds big-headed. I think I was above most people in that room in terms of marketing, because marketing's sexy. Marketing brings money in. Accountancy, it's not sexy whatsoever. So me being attracted to sexiness, I'm all over marketing. I've been studying marketing for many years. Accountancy, couldn't give a shit about. Anyway, I just got embarrassed about it. I got embarrassed. And the only way I could up level was, put myself out my comfort zone. And that day I was so far out my comfort zone, it was unbelievable. However, now I've done it, and I've been a part of his mastermind now for 4 years or something. And I believe, don't get me wrong, I repeat, I am not amazing at cash flow, at accountancy, but I'm nowhere near an accountant's level, but I am better than most business owners purely because I have got an understanding about the accounts. Okay, so accounts is one thing. The profit and loss is another thing. That's all fantastic to have. But if you really want to understand your business, then we go on to the next thing called EBITDA, earnings before interest, taxes, depreciation, and amortization. And the reason why this is so important is because in terms of your, so for example, I think my last accountancy, the year accounting was £300,000 net profit. However, my EBITDA was earnings before interest, the depreciation and amortization, right? That was 440,000. And so that is what we should really focus on, EBITDA, because interest and taxes and depreciation, they're all things that, depending on who has the company, it's going to be different levels. It's going to be different things, or thereabouts. So for me, we've got to focus on EBITDA. That's really, really important. However, what I've just been realizing, and I'm trying to borrow more and more money, and I've been looking up and educating myself how to do this. There's something called CFADS. Now, a lot of you listening won't understand CFADS and know exactly what it is, but if you don't, it's cash flow available for debt services, CFADS, cash flow available for debt services. Now, CFADS is so important because if you look at depreciation, so say we buy a capital expense, like, I don't know, a fit out for self-storage. Maybe we spend £500,000 on that. That sits in our balance sheet. However, it depreciates over a number of years. It might depreciate over 10 years, 15 years, whatever you choose to depreciate over, obviously depending on what the asset is, depending on how much you can depreciate over what certain amount of time. However, you've already paid that. So it depreciates on your profit, on your accounts. So it might depreciate, like for example, say it's for ease, let's say you spend 500,000 and let's say you depreciate over 5 years. So that means on year 5, it'll be worth 0 on your balance sheet. So for year to year, you're losing £100,000. However, you're not really losing that £100,000. Although it's on your accounts, you are not really losing it. That is why EBITDA is so important. But EBITDA, it includes depreciation and tax and interest that you pay. And so the thing is, you have to pay interest and tax. So they're things that are going out. Now, this is why you can't use EBITDA for when you're looking at your debt services, because interest and taxes you are paying. They are going out every single year. However, the depreciation isn't. The depreciation on your capital assets, on your CapExes, is not going down every single year by what you're taking off of your accounts, if that makes perfect sense for you guys. So as I've said, you already paid the £500,000 out, but the depreciation is going down off your accounts £100,000 a year to get to 0 over 5 years. Obviously, it's going to be longer, but for argument's sake, just for ease, that's what we do. And so it's so important to know your CFADS when you are going to whether it be a broker, whether it be asset finance. Asset finance, I don't think they've ever asked that for me, but certainly private investors have, and also the banks. The banks, if you want to impress them with your next level, then you want to have, you want to know your CFADS, you want to know your EBITDA, and obviously you want to know management accounts. But CFADS for me are the most important, because right now, this is what we're going through. Today, I've got a meeting with my accountant, and we are talking about my CFADS, because I want to know exactly how much cash flow available for debt services, because it's okay having the cash flow all done and dusted there, but how much is actually available on a day-to-day month? I mean, it's fairly easy to see on cash flow because your net position, that's basically what you've got. However, if you look at your accounts, it is so difficult to know fundamentally what you've got available to repayment of loans to actually get that debt down. So that is why CFADS are so critically important for anybody who's looking to expand and wanting to borrow a serious amount of money. This next venture we're going in, I need to borrow £500,000. £500,000 just for phase 1. Fuck me. Yes, I said fuck me. And phase 2, obviously, I need to borrow maybe 400 grand. However, it'll look beautiful. So I need to know my CFADS are in order to make sure that I can repay that debt. Not only can I need to know it for myself, I need to prove it to the lenders who are going to lend me that money, because if truth be told, I don't have all that money sat in my bank account. And no, by the way, if I did, nor would I want to deploy all that cash for that facility. I'd make sure that I've got a little buffer. So yeah, I've got to borrow. And by the way, having a buffer as well, it depends. Some people say you need 3 months expenses. Some people say 6 months expenses. I'm more asses to the sea and just ride. I ride very close to the wind. Right now, at the minute, I got maybe 9 months. But because of self-storage, because of the way it is, and please, this is not financial advice whatsoever, but because I feel that it's very repeatable and predictable, then I feel like that I personally need less buffer than most businesses. However, I do have a cash flow forecast all the time running in the background that I know how much that if we lose 10%, if we lose 10% of revenue, 20% of revenue, and at the minute, I think that my cash flow forecasts are predicting losing 10%. Even though I don't think we will, my cash flow forecast is worked on 10% lower, or maybe even a bit more. But just so that I know that we're okay. And so that is it for today. So if you don't know it, look up EBITDA and look up CFADS, because if you want to know, the reason why I'm telling you this as well, because I got my knickers in a twist when I was opening my first storage in Willoughby, because I just thought, there we go, that's what we need. The capital expenses, okay, yeah, brilliant. But I didn't understand the fact that not just the capital expenses, but the cash flow position, the cash flow negativity that it would show. So my expenses was maybe, 300 grand, and my revenue was £10,000 a year, something like that. And then it slowly grew up. So I had a massive cash flow deficit, and it nearly broke me. Honestly, it was in a horrendous position. So I never want you to be in that position, because you've got to learn from my mistakes. And understanding having your management accounts, first of all, not on a yearly basis. That's number one. So monthly management accounts. That's including cash flow, balance sheets, and profit and loss. Number 2 is understanding your EBITDA, making sure that you've got that down. But then you can't use your EBITDA for your cash flow debt services, because if you do, then you are in a bit of a problem, because you've got depreciation and taxes there that are coming out of that cash flow. So you need to know your CFADS, what your CFADS are. There's a great, if you just Google CFADS, there's a fantastic financial modeling system here that just goes through your CFADS, and it's really, really good. There's also cash flow available for debt services for wallstreetprep.com. I've been through these this morning. Really, really fantastic stuff. However, I personally don't need it, because I've got a great spreadsheet for my cash flow. And so I know roughly what it is just by that spreadsheet. Not roughly, I know exactly what it is by that spreadsheet. Anyway, hopefully this is, I don't know, interesting and helpful for people who are looking to borrow, because at the end of the day, if you are scaling your self-storage business, it's a lot of capital expense. I was on the phone with someone yesterday and was talking about outdoor storage versus indoor storage, which is most capital expenditure. And they was really, really surprised at how much capital outlay you need for an indoor self-storage. It is incredible. But not only that, not only is it the capital expenditure, which is greatly increased over container site, it's the running costs as well, because you've got the higher rent and you've got the higher rates. That's a problem. And the shop fit as well, the capital expenses, you fit out maybe 10,000 square foot, 20,000 square foot at a time, where a container site, it's only 1 or 2 containers. And that, for me, is why I believe if you're new self-storage, it's probably better, if cash is a problem, that you go down the container site, you go down this container route. Ultimately, I do feel like you get a better multiple, much better multiple, and the bigger boys will be interested in you if you've got a nice indoor storage, because I don't know anybody out there at the minute who's buying up container sites. By the way, if you want to sell your container site, I'll buy it. So please get in touch with me, deanbooty@icloud.com. We're sending out letters to everybody in the next couple of weeks wanting to buy self-storages. But yeah, I believe that the higher multiple for sales is indoor rather than, obviously. And so it might be a strain on cash flow first of all, but ultimately long term you will win with if you can ride the waves of cash flow problems, then indoor self-storage wins over outdoor self-storage. But in terms of cash flow, immediate cash flow, then indoor self-storage wins for me. Outdoor self-storage wins on that one, and then long term indoor self-storage wins. Anyway, as you can tell, it's hard to explain, especially hard to explain for someone like me who is rubbish at explaining the most simple things. And so when I'm trying to explain something not complicated, but what most people haven't heard of, or very few people, I don't know what standard of people who listen to this, but I'm trying to explain it in a dumbed down version that I could understand it if I was listening. Right, I think I failed. Right, my friends, have a wonderful day. I love you. I appreciate you. And get looking at the CFADS and EBITDA. All right, love you. Bye-bye.